Alrighty. It's Saturday.
Saturday.
How are we doing this week?
Mate, busy week. Busy. And next week is going to be even more busy. So for those of you who don't know, a lot of really cool projects are listing this week coming up. Namely, I think Gather is coming up on Monday. Then we've got Kira next week as well. We've also got, I think, Union Finance coming up soon. APY at the end of the month. A lot of really big, interesting projects that are going to be listing. So I think September is going to be a really interesting month, as well as obviously the usual crazy stuff we've seen happening in the markets over the past week, really. If anyone's sort of seen the dip that we've just seen, it's been an interesting one. But we can talk a bit more about that in detail as we go on.
Yeah, absolutely. So today's schedule is going to be a bit different because today I don't have any slides. I've been quite knee deep in research this week. So, but there are a couple of things that I guess that are relevant to bring up this week. I guess what's happening in the markets, and something I was actually discussing today with someone outside of the space is really they were talking about how the US elections are likely to impact the crypto market, and this is someone that's looking at getting into Bitcoin for the first time, right? And they were asking me, is it a good time basically to get in? Right. So, and I guess my initial response was, let's see how things play out after the US elections, because honestly, I don't even know how, the US markets really will react to that. And right now, crypto is so related, So I mean, price movements are kind of like I don't know if we want to use the word correlated, but I mean, it's at least when the US markets move down, crypto markets tend to move down as well, right? So we kind of saw that in the last week as well. You have any thoughts around that?
So I was actually tweeting out our weekly update while you were talking about that. So just give me the brief one. So what we talk about what the market's done compared to what the global markets have been up to.
No, so I mean in general, how are the US elections likely to impact the crypto markets?
Very, very much they will. Absolutely. I mean, we still aren't in a situation where we're sort of decoupled from the US market. So there's no way in hell that you're going to find, if there's a crash in the US market, or they're no longer printing as much money as they were printing, or people are concerned that maybe if the Democrats get in, that they won't continue, the sort of crazy policies that Trump's been doing of just printing money and buying, corporate bonds and things like that. People will obviously be scared leading up to the election that gravy train is going to end, and that maybe the United States is going to go through the stock market crash that brings their market a bit closer to what reality should be. And crypto is not immune to that yet. Like, we're not in this space where suddenly, a collapse not a collapse, but a crash in the world's largest stock market does not affect crypto. I mean, at the end of the day, we're all still human beings. There's still going to be emotions, and there's going to be fear. And people will, if they see the Dow Jones drop by 10% in a day, you can be absolutely guaranteed that people are going to drop their crypto as well.
Yeah, that's fair enough. I mean, one of the other things I was discussing with this person today is really about Fed stimulus and how long is that going to work for? Because at some stage, I mean, everyone knows that basically, the US dollar is getting devalued every day, and that the more they print, the more they devalue, and the more that people look to hedge to kind of safer assets like gold, right? And just they just want to hedge to kind of basically non-country specific, safer havens, just so that they can weather whatever the potential outcome could be, right? So I mean, like, what do you think? Like, you think Fed stimulus? I mean, how long can you play that game for until like?
Well, the good thing about the Fed, and that's why there's memes about it, like, money machine go burr. I mean, essentially that can keep going on forever. The biggest issue is that, like reducing interest rates, like quantitative easing, and a lot of other things, is that there's a diminishing return. So, the first time it's quite effective, the second time it's less effective, the third time it's less effective, all the way down. So, I mean, don't get me wrong. I mean, there's probably still scope for this government buying to continue to prop up the markets. And I think the Fed and the United States government, they're of no sort of disillusion that the equity markets are decoupled from reality. I mean, there's no one is going to be stupid enough to think that we've somehow saved the market. What they're really doing is buying time, so that instead of you end up with the real market has sort of done this, the equity markets have sort of gone like this, and all they're doing is trying to maintain so that then they can both catch up at the same time. So that you don't end up with this happening and then this. Because when there's a crash, I mean, I'll be honest with you, whenever there's a crash, it's not the wealthy that suffer. It's never the wealthy that suffer in a crash. I mean, some, yeah, but the wealthy also are better diversified, and they'll have more cash in the bank to then buy these valuable stocks when they are, emotionally dumped. And it's generally the poor and people with not the poor, because they wouldn't be investing in the stock market, but it's generally those less wealthy that are the ones that are dried out. So, any decent government, and I don't really sit in any particular, I'm not really on any side of politics in the United States or in Australia for that matter, but I think that is what their strategy is, to try to reduce that dip. And I mean, look, at the end of the day, the people that are really going to suffer in a big crash are going to be the Robin Hood people who have been spending their stimulus checks on buying, call and put options on Tesla and shit like that. Like, these are the guys who are going to suffer. Like, your Bill Gates and your Warren Buffetts and all those guys aren't going to be affected in the slightest if there's a crash, because they've got plenty of money on the sidelines.
But what about these? So these recent pullbacks that we've had, like, with Tesla and Apple recently, you've seen like 20-30% just getting wiped off their stock price. And obviously, like, people saying, these stocks have been completely overvalued for a while. Someone else put up, what's the other company? There's another company out there that's
Amazon?
Completely overvalued. No, it's another.
Your big ones are. I mean, it's not your fear companies, are they?
No, but it's another tech company, and it's completely overvalued, and everyone's basically speculating that it's going to correct. And that's the thing, is like, okay, so Fed stimulus basically allows the economy to keep churning on, people just spending money kind of like happily and like thinking that things are all merry, and then the price keeps going up. Now, when the tech stocks kind of like correct, that isn't an indication, right, that the economy's like going to shit, right? It's more like
it's just. I mean, I'll be honest. I mean, the economy is already in shit. It's just that the markets will reflect a reality. And for people that have been trading these markets, especially the United States equity markets, that are, very, very much, not showing the reality. Like, companies are still trading and going up despite the fact that they've lost heaps of money. They're losing customers. I mean, you cannot tell me that Apple are going to be selling as many iPhones this year as they would have last year. It just can't happen. So, I mean, therefore, you could say, okay, well, if you've made a bit of money out of it, maybe it's time to take some off the table. Now, the reason why this is relevant to the election is that if Trump, it's going to be uncertainty about who is going to win, because you can guarantee that if Trump gets in, I mean, they're going to keep trying to this policy of printing money to buy debt in order to prop up the markets, and this is how they're getting money into the economy. And there's probably going to be more stimulus and things like that. So, whereas obviously the Democrats have sort of indicated they're going to have a similar policy, but will be obviously a bit different. And I guess we'll just see what happens. But there's more uncertainty. So you're going to see, and people dislike uncertainty more than anything else. And generally, that's what's going to cause instability, which would generally see a sell-off. So, I mean, most people would be tipping a sell-off pre the election. So, October, November. Personally, I mean, I don't like making predictions, and this isn't advice, but I mean, my guess would be we're going to continue to see, I wouldn't say crazy gains. Like, I don't think we're going to be seeing, the Dow Jones up another 40% or something over the next sort of month. But I think that we will see, you won't see, what's sort of been happening since April up until now, that sort of, the pandemic drop, and then it sort of just went straight up again. You won't see that happen again. But I think we'll still see a climb leading to October. And then basically people will start to pull money out, as a risk mitigation strategy, to sort of, to see what happens with this election. Because, yet again, I mean, I've got to say, even I talk politics with people all the time, and even though as I said, I don't have a horse in the race either way, or feelings one way or the other, but it's very interesting. Everyone you speak to has a different opinion on who's going to get elected. It's like, I mean, I was at a family dinner tonight, and people were just saying, everybody was like, yeah, Trump's definitely going to get in. No, he's definitely not. He's out. Biden's 100% in. And everyone was absolutely certain about it. Personally speaking, I mean, my money would be on Trump to win, just gut feeling. And I don't have a feeling one way or the other. Like, I don't care whether he wins or he doesn't. Politics aside, my gut feeling says the guy's gonna shoo it in, just because of everything that's going on in the States at the moment. Right. And I think that, but I think that because there's that lack of certainty, and even obviously, people were thinking that Hillary was a shoo-in for the US election in 2016, and then that was a pretty big upset. So I think that this time, Trump has the ability to really, really sort of, upset people's expectations. So if people expect that he's going to win, he's probably going to upset everyone and not. So I think that because of that, like that level of uncertainty, people aren't going to be putting more money into the market leading up to the election. Generally, people will be pulling money out and having it on the sidelines so that they can then make a decision after the election.
I think that's completely a fair assessment. I mean, I've been thinking about that myself. Just there's something that last week kind of like reminded a lot of people in the markets, which is basically take profits when you can. And I think that a lot of people kind of like forget to do that, or otherwise you get really greedy and, your 40% that you've made on something isn't enough, and you want to make 60, 70, 80%. Right?
Oh, mate, it's not 40% in crypto. It's 100x, 10x or get out.
Oh, just yeah.
If you make, I mean, I remember in one of the groups I'm in, there was a thing about, I made 5x, and it's like, what is that? Gains for ants? Like, is this a gain for ants? And that's, I mean, I think I don't think those days are over for crypto. I'm not suggesting that people go in and pump their life savings into it. But I think we've still got a little bit more of that left to go, at least for September. I think we're going to see some interesting stuff come out. But the thing is that even last week, I mean, I didn't call the bottom from a technical level, but as soon as I saw, I think Ethereum cross back over sort of 340 or 340, 2 days ago, I was like, yeah, it's on again. Like this isn't the bottom. And the other part of that wasn't just from technical analysis. It was also because so many people were calling another leg down. So if you understand how the bull to bear ratio goes, is that basically when you've got everyone's bullish, it means that like everyone you speak to is bullish. It means that their money is deployed into the market, or the majority of their cash is deployed into the market. And the only way for the market to increase further is for more people to then get involved. So you need more people buying, and then them being bullish as well, and then telling their mates, and then everyone else buys. However, when we had that downturn, when we saw Bitcoin around that $10,000 level, and Ethereum went down to like 320, everyone was bearish, which means that most people had already sold what they were going to sell. And they had their money sitting on the sidelines waiting for the next leg down. And of course, when it didn't happen, then all that cash got deployed again. And we're starting to see it. And there's going to be people that are, and I still see it on Twitter everywhere, people saying that, this is a bull trap and we're going to go down, blah, blah, blah. I mean, who knows? But I mean, my view was at that time was that, well, this thing should go up, because if everyone's saying it's going to have another big leg down, and it was almost like this consensus agreement, you could feel a bit of fear. And I think whenever you get that level of fear, that's generally the time to buy. I don't think that we didn't have enough of a bull run that we were deserving of despair for a low. I think it was just a little bit of fear to say, okay, we need to cool down a bit. We need to stop investing in hot dogs and kimchi and noodles, unaudited yield farming projects. We need to maybe stop that shit, stop trusting in non-developers, stuff like that. Which probably leads us into the next point. So I don't know if anyone's seen all the joy that we've seen with sushi, but that was an interesting one for the week. I don't know if anyone sort of had a look at that one, but did you see all the drama that happened? Did you see my amazing video on sushi?
So I haven't seen it yet, but I've been following a couple of the tweets. I've seen these links with was it with Band Protocol as well? Have you heard about that?
Yes. Oh, you mean in regards to the conspiracy theory?
Yeah, so the CTO of Band Protocol being linked to... how they were trying to do a rug pull. How the founder basically was doing a rug pull, right? On the whole project, but apparently, yeah. I mean, I don't want to give away like the ending of the story, because I saw what happened yesterday, and that's quite a turnaround on the whole drama, right?
Yeah. So I just lost you there for a bit, but I'm just going to post my video in here, just because I'm in a complete shill. But no. So what happened was essentially, obviously, an anonymous founder basically copy pasted the Unicall protocol code, and then changed it so that obviously there are a number of different smart contracts, which, don't get me wrong, is a decent amount of work, that would allow for tokens to be issued, and then there was functions for those tokens. So if you provide liquidity to Uniswap, you're usually rewarded with 0.3% of all of the trading fees would go to the liquidity providers. However, under the SushiSwap model, if you provided liquidity, you would only get 0.25%, and then the other 0.05% would then be issued, like the trading fee proceeds would be issued to existing sushi holders. So the idea being that if you held sushi tokens, you would be getting a perpetual dividend of more sushi as the trading fees accumulated. So it's quite ludicrous. And then you're rewarded for providing liquidity in sushi tokens as well. You get a share of 100 sushi tokens per block. And then if you're part of the sushi F pool, you end up getting 2 times that, because it's, they're promoting their own token, and they want their own token to be liquid. So essentially what happened was, for the first 2 weeks, the token to promote or to try to encourage more people to provide liquidity to SushiSwap, they offered 10 times the usual block bonus, so from 100 to 1,000. And then leading up to the migration, for when they were just basically staking liquidity in the SushiSwap protocol, in the sushi protocol, whatever, just before about 3 or 4, it's been a week, I think. So no, it's been just under a week. So I remember it happened last Saturday was when this happened. So and then maybe, let's say, 4 or 5 days before, we were meant to see the protocol go to become SushiSwap, and we're meant to be able to trade on SushiSwap. The founder, Nomi Chef, sort of, liquidated the entire development pool fund. Oh, sorry, that was one point that I missed. 10% of all newly minted sushi, which was essentially equates to 10% of the entire circulating supply at any given point, goes into the dev pool. And the dev pool was sort of like, it was the only part where the founder had absolute control over the wallet. And essentially last Saturday, while we were doing this stream, he essentially liquidated roughly, it was, depending on how you value the Ether at the time, but between $12 to $16 million US dollars worth of tokens and fucked off. And then literally disappeared, and he was like, "I'm out. Yep, the project can continue without me." And which, and if you have a look at my video, it goes a bit longer than this, so I won't rehash it all. But essentially, he had made commitments to the community that he was going to stick around for the long term. Like, he's quoted in saying, "I could dump on you, but I'm not, because I'm a nice guy. I'm here for the long term. Blah 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 blah." And then he fucked off anyway. And so. And more recently, an update to that story, though, is that yesterday he actually returned all the funds.
Yes, exactly.
And now the big thing is, and now the big bullish part of Sushi is now that they're putting it to a community vote to see how much of that money is going to be used. It's like $14 million worth of Ethereum is going to be used to rebuy Sushi tokens, which will push up the token price. So it's all very interesting. The conspiracy theories are going ballistic, saying that this was part of the plan all along, and that now that the guys from, it's sort of like originally there could have been all these, hurdles on how to spend this money, and yet the guys from SBF from Serum is somehow involved, and he's like, the puppet master pulling the strings, or whether it's the guy from Band Protocol or something else. There are just so many crazy conspiracy theories that, generally with these things, 9 out of 10 aren't true. So back to your original point, the Band Protocol one, I don't believe it was the guy from Band. Now, I don't know Band Protocol that well, other than that it's a mildly controversial Oracle project that people either love or hate. The only comparisons that you can draw are, there's a few pieces of evidence that link Band to Sushi. Number one, they share the same hosting provider, which is a company called Render, so similar to like a GoDaddy, I think. But Render has like 1,600 sites that they manage, and blah blah blah. And it's like, sure, there's only 2 blockchain projects, and it's SushiSwap and Band Protocol, but it could just be that they're both Thai. The Band Protocol is based in Thailand. The other point was that both the CTO of Band and Nomi Chef both like Hearthstone, but there's 100 million players of Hearthstone around the world, so okay. There was a note where Nomi Chef talked about how 5F could pay a month's rent where he lives, which that could sort of be rent in Thailand, I guess. Well, no, 5F would be more than a month's rent, even in Australia. Jesus.
Like you were saying, right? So basically, they're voting now to see how much of those return funds are actually going to go back into Sushi. And then, the amazing thing is, like, obviously, when he took out those funds, he weathered basically a week's worth of like market crash. So that value that he took out.
I think the Ethereum would be roughly, he would have made money on the Ethereum if he had sold out and held for that week. Because by that time, Ethereum had already tanked when that had happened. Now, it might have pushed it down a bit further, but I think by the time that he sold, Ethereum was already under $400 US. So, yeah, I think, but either way, I think there's not enough evidence to sort of hang the Band CTO. And I've read articles written by the Band CTO and looking at the written English of Nomi Chef, and they don't appear similar. Like, I went through the whole Discord chat. Every message Nomi Chef posted in Discord, I read. All his tweets, everything that he's posted online, I've read. And I didn't really get the same, when I was reading them, how when you read it and you can hear a voice in your head, I didn't get the same voice basically from what I was reading. And there are there's a few other bits of evidence, but I think that human brain is generally a big, it's a big piece of analytical software where we look at, like, it's a big pattern recognition machine. And I think people saw patterns where they wanted to see patterns, and then they just made up their mind, and they got a bit of, confirmation bias. I want to believe this, and then they'd only accept evidence. Oh, it's definitely him now. Personally, I know, I just didn't see it. And there's some other bits of stuff that was just, I don't know, like, he'd seen the code, or done something with the content. It's just like, whatever, man. Like, that's
so the last result that I saw basically for the vote was that like 100% of people were looking to actually put 100%. No, sorry, there was 70% or so of votes were in favor of putting 100% of the funds back into sushi.
Of course, and people would. I mean, but it's like, then what? I mean, like, because sushi is who's going to own that sushi then? Is it going to be distributed to token holders? Is it? I haven't really been following the votes on where it's going to go. But it's like, who then owns that sushi? Does it just go back into the dev fund and it just sits there? So who knows? I think all of these projects, especially with governance, are just a big experiment to see whether a community can drive a project better than a single individual. And I think the big test here is going to be to see who wins. At the moment, there's more liquidity being shifted over to Uniswap, but will Uniswap, to SushiSwap, but will SushiSwap be able to, say, adapt, and will it be able to innovate as fast or as well as Uniswap can? In order to keep users and make security better and the way that listings happen and things like that. I mean, I don't know, but what's going to be interesting to see is over the next 6 months. I mean, people are always going to move their liquidity over to SushiSwap because they get that benefit of the you get that benefit of the trading fees and the fact that you get the sushi tokens and stuff. So there is that incentive there for a lot of liquidity providers. However, I mean, I think that at the end of the day, it's really going to boil down to is where people are going to trade. What is going to be a better environment and a better user experience for the end user to trade on. And now at the moment, because SushiSwap is essentially a copy paste of Uniswap, there's not really much of a difference. But I think in the next 6 months, I think that Uniswap will be able to innovate and update their platform and their UI and all their stuff a lot faster than SushiSwap can. Because a lot of the SushiSwap stuff has to go to a vote to get updated. And there's only, they've only got limited developers as opposed to Uniswap that's already got like 11 developers all churning out stuff all day. They've all been working together for the past however long. It's not this, random dudes on the internet that you've never worked with before and you haven't got systems in place to push out code and updates and all this kind of stuff. Whereas the guys who are working on Uniswap, and Hayden in particular has been working on it for 3 years, and he would have a much better understanding about the best way to, update and where to push code and all these different things than anybody else. Yeah, so sure. I think for that reason, SushiSwap will probably get some early wins. But as a business, I just don't think that it'll be able to roll as fast in regards to updating and making the end users want to use it as well as Uniswap can.
Fair enough. Interesting. And
so, at the end of the day, just remember, we're still, despite all this crazy DeFi shit and all the stuff that's going on, I mean, at the end of the day, it's still a business. And all these products that you're seeing, they might be cool and blah, 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 but they've all got to be used by somebody. And they've all got to be, there's got to be some commercial outcome. They can't just be like shit just being created and hoping for the best. I mean, like the big reason for someone to hold sushi tokens is because you get this ongoing drip of the commissions from trading on SushiSwap. Now, if all this liquidity is there, that's great. But if no one's trading on it, then there's actually no benefit to SushiSwap tokens being held because you're not making money because there's no trading fees.
I mean,
so at the end of the day, still think about this business
controversy around. Isn't that the controversy around like all these plants, the harvesting crops, right? So like things like yams and like all these other like creations, right? All these tokens basically inherently have no intrinsic value. I mean, they're not used for anything other than
true.
Trading and
what you're seeing. No, I mean, like you've got to understand is that we're in a unique when it comes to the DeFi space at the moment. I mean, just remember, yield farming didn't exist before Compound. Really, I mean, before people could worked out that they could put money into something and loan it to themselves, and the value of the underlying governance token was worth X because of whatever yield. And then YFI came out and then said, okay, what we're going to do is we're going to make this process super easy, and we're going to automate it for people. And because we're going to pull all the funds together, the Ethereum contract fees are going to be absolutely negligible. So therefore, it makes it even more profitable. So this whole yield farming thing, remember, it's not, I don't think anybody believes it'll go on forever. But it's sort of like if you can get on board for the first 3 or 4 months, you will earn the highest yield possible. And then when it gets down to, as more people get involved and there's more money, and the governance side of the governance tokens become, I guess, more available, then the price goes down, then the yields will go down with it. Because essentially, like, you know, YFI vaults, all they're really doing is you're dumping your Y curve tokens into a vault, and then what they're doing is they're then earning your curve tokens, and then they're then dumping your curve tokens into a pool, selling them, buying more USDT, or selling them for more USDT, depositing that USDT back into Y curve, and then exponentially earning more curve tokens, which are then dumped into the market. Now, as this cycle continues, the logical assumption is that the price of curve tokens will decrease. Therefore, the yield being earned will decrease over time. And we've seen that. Like Y curve at the moment, if you look at the USDT vault, it's down in the 80% mark. And last week, it was in like the mid 90s. And probably in a week, it'll be down to 70. Now, I've been looking at Harvest.finance, and the APY on that has gone from 180% down to like 50% in the space of a week. That's just because the more people that get in, you're then splitting those benefits between more people, which means that the yield is low. So if you're just one person and the only person mining this token, that means you're getting like 100% of the tokens being issued, right? And if the token's worth $100, it means that your APY ends up being absolutely ballistic. Whereas if, you know, your $1,000 isn't the only $1,000 anymore, then there's a bunch of people putting in millions. Your APY that was from $1,000, it was, you know, would have been hundreds of percents or whatever, is now down to a more reasonable 70%. Then when it goes to 200, 300 million, then that shrinks down again, assuming the token retains its value. The other thing that happens if, say, the farm token that Harvest uses, if that goes down, then so does the yield. So this isn't going to always be this crazy kind of like thing where people just are going to be putting money in and they're going to be doubling their money every year. This is some high yield stuff that's going to happen for the next few months, and then more people pile in, which then makes it more safe and a bit more secure. But on the same note, then the yield goes down because the risk to reward, like, you know what I mean? Low risk, low reward, high risk, high reward. So yeah, I mean, that's essentially the way that a lot of those things work. If you're yield farming now, you can actually, and a lot of people are making a lot of money now yield farming, even with rug pulls and that. If you're just doing it on every platform and you're just hammering it out when they first come out, you're one of the early starters. You can make a lot of money.
What about holding the tokens? I mean, like, if you look at Wi-Fi right now, I mean, that they were one of the first basically to bounce back this week.
Well, that's it. But essentially the big value from Wi-Fi is that, you know, they limited token supply at 30,000. So if you're one of the early adopters, you were the ones who said, I'm going to take a big gamble on this code that this random dude has written. I mean, admittedly, he used his own identity, which is a plus, but who even himself said, I'm writing this to myself. You know, this token has no value. I mean, even though if you have a look at the way that Wi-Fi works, I mean, it does actually have value because you own a certain percentage, or you own a pro rata percentage of the vault assets, like the vault fees and things, as people put money in and pull money out, and whatever, you own that percentage. So there is underlying value of the Wi-Fi vault, of the Wi-Fi token. However, I mean, you know, it's also the first one that's really done this. So I mean, there is value to it, and that scarcity, the fact that there's only 30,000, I mean, does make, or is it 20,000? I can't remember. The fact that it's such a low supply means that, yeah, of course it's going to be seen as being valuable. And I think that Wi-Fi will probably keep going because it's the original, and yeah, you can't farm it anymore. You just got to go for it. Whereas, and the same thing will happen to any successful project that is farmable now, and then has a limited supply, like Compound is out in 4 years. And then after that, you'll probably see the price of Compound going up. But then the other thing is that you'll probably see less people farming on Compound because there's no more incentive. And then what you'll be left with is the true face of DeFi, which is going to be actually how many people are lending tokens and how many people are actually borrowing that's when you'll see those figures once this whole incentivization phase is over.
Yeah, that's true. Interesting.
Sorry, I just rambled there quite a bit, but I hope it was at least mildly interesting.
Yeah, not at all. No, that's definitely been really interesting. Something else I've kind of been following actually in the Twitter space is actually seeing this the connection, the bridge basically between like the gaming space, the blockchain gaming space, and the DeFi space. So I don't know if you've seen recently. So I haven't dug too deep into it, but I've now seen like even one of our ambassadors from the Philippines. So one of our blockchain game developers over here has been actively chatting with Andre about Y insurance. So since we released Y insurance, they're now adding Y insurance onto NFT NFT assets, like for blockchain gaming assets. And I have absolutely no idea why people would actually want that insurance. I assume that basically they might want to lock up their asset, take insurance on it, and put their cash somewhere else to try and create higher yields. And then in case something happens to that cash, at least.
Well, anyone who's been involved in the space would know, like Nexus Mutual has done excessively well, and is the main, sort of DeFi insurance sort of provider. And then, the way that it works is that you essentially have a token linked to almost like a bonding curve. That the more supply, the more insurance that is taken out, then the supply, the token price will actually increase. And then you can then stake your token to insurance policies to earn. It's actually quite a nominal amount of NXM. And then if the policy goes bad or something, basically the policy needs to be called, then you risk your stake tokens. So it's an interesting way to provide insurance. And apparently it's very liquid. But that's been incredibly popular and incredibly successful. Like Nexus Mutual has been an incredibly successul project over the last.
They've been around for?
Sorry?
How long have they been around for?
Nexus, I think since start. I mean, they've been around for a while, but I mean, obviously, it's been the amount of insurance they've been issuing has been obviously exponential since sort of June. So they've gone up quite a lot in value since June. I think. I don't know how much it was worth when I first bought, but it's gone up quite a bit. I think 10x. But that's because there's been 10 times more insurance issued, and they still haven't had. There's no real major claims against it. But even if they do get a claim, it generally shouldn't affect the token price too much. But essentially, my point is the product has been successful, and of course, people who are big fans of YFI and what they've done there will then say, okay, well, if they're so good at sort of this yield farming thing, why not also do an insurance product? Because I mean, YFI is perfectly positioned to do that as well, because they've got they've got literally one of the most used platforms. That sort of encourages liquidity to a lot of these DeFi projects. So they're in a perfect space to then say, okay, well, we control significant amount of your liquidity. How about we also look at insuring whatever the hell you're doing? Because they'd also be insuring it on behalf of their users, because the users are the ones that are providing the liquidity.
Interesting.
If that makes sense. I think that's what they're doing. I'm just speculating, to be honest. I mean, until there's something out.
So do you stake their tokens? So if you're
absolutely not, absolutely not. The worst thing about staking NXM tokens is it's a 90-day. I think it's a 90-day lockup. So you're locked for 90 days if you put in. So it's just like you're just not liquid enough to bother. I mean, right. I would only generally. I know that I am staking. The most I would go is I'm staking some of my Mantra. Mantra. OM. So some of my Mantra DAO. I am staking that on what is it? Bitmax. I'm staking that, but that's an 8-day unlock, unless you want to pay an 8% fee. They love their 8s, but yeah. But yeah, Mantra DAO is paying 88%. If you want to exit, it's an 8-day unlock. If you want to break that, you can exit with an 8% fee. So, but I'm happy to put that. I've got a. That's my moon bag that I'm going to hold for the next year anyway. So I don't mind that. But essentially, yes. I would cop that. An 8-day unlock is like, oh well, yeah, I'm sort of might want to take profit soon, so I'll unlock it. Whereas 3 months, I mean, 3 months is an incredibly long time in crypto. That's way too long.
Yeah. Okay. Yeah. That's true. That's true indeed. Yeah.
What else was there? I think there was. Haven't seen much else though. There's been that drama, and then obviously there's still the sushi drama is still ongoing. I mean, the conspiracy theories will come out. I think. Look, I mean, as a community design project, I do actually like what they're doing. And I think that, the whole idea of getting a community, building a product, and then, incentivizing the community to get involved is a really, really good way to run a project. I mean, say what you will about the copy pasting of the code. I mean, it's a good way to innovate, I guess. But I think that it's sort of like, I think that there has been so much negativity around the project, and it's only 2 weeks old. I think that it's just like but I mean, there's two parts to that, right? There's so much negativity, the project's so young, and there's just constant negativity that it's like, maybe there's, some bad juju hanging over the head of this thing. So maybe we just start fresh with something new. On the other hand, there's a lot of money invested. So there's a lot of people who don't want to see this fail. And the community is quite strong. So I think I said this in my video that if the community can get past something like this, then they can get past, anything. So there's that as well. I mean, this could be the resilience that the community needs to be able to push through anything that happens in the markets over the next couple of months. So there's that as well. I mean, having that good, strong community support is incredibly important. But I would argue that the community support in uni has been quite good as well. But I mean, I guess people love their free tokens, so they're easily bought. But other than that, I mean, they've been the main parts of the news that I've been focusing on, and then I'm obviously looking at a lot of these projects, looking at. But personally speaking, I think that we're going to see, maybe the major projects out there are going to be going sideways for the next little while. Maybe the next, couple of days to a week, we're going to see sideways movements, and then I think we're going to see. I'm hoping for a run for late September, and then October. I mean, we'll make a call on October after we see what happens there. But I don't. Just to everyone warning. I mean, that's what I'm sort of thinking. That's what I'd be trading off. However, I am really bad at prophecies and I'm really bad at predictions, so don't necessarily pay attention to that. Half the time that I put something out that I think this is going to happen, I'm wrong. So yeah.
Like the token projects that you're kind of taking care of at the moment. I mean, what kind of projects are these, and what do they focus on?
Well, there's a few. I think the really, really cool one that I'm liking at the moment is Gather. That's releasing on Monday. That's basically what it does. Essentially, imagine this: if you've ever YouTube, for example, people will be watching this on YouTube. If you get annoyed by YouTube ads, or if you watch some show on a streaming site and there's just ads always, and you're like, mother, or if you're, you go to a news site and you're like, I'm just sick of ads playing in the background, or I'm sick of these paywalls, but I still want to see the content. What Gather allows companies to do is to, instead of pushing ads to their users or pushing, paid paywalls and things like that to their users, users can opt in to say, well, I don't want to have ads, I don't have paywall, but you can use my passive processing power while I'm on the website. Now, this has been it's been tested over the past 2 years. So I've been working for, I'm selling it. I'm not trying to sell it to anybody. Obviously, do your research before you buy anything. I'm not trying to sell it, but I do like this as a concept. Is people can opt in and say, well, I don't want to see ads, but yeah, use my spare processing power, as long as it doesn't, hinder the use of my computer, as long as I'm not, being slowed down to a snail's pace. Just use my passive processing power to mine cryptocurrencies. And so that's what it does. Essentially just takes over, and it not only mining crypto. I mean, that's a very I guess I'm trying to make it as simple as possible so I don't ramble on about it. But it doesn't. They do a number of other different things to that processing power. But essentially, you farm out your processing power of your computer while looking at a website. Once you close the website, it stops. But the idea is it allows the company to be able to benefit from their content without, with less of a hindrance to the user than what they're currently experiencing. So if you're getting bombarded by ads on Facebook and you're on Facebook or YouTube, and you don't want to watch the 5 seconds of an ad, or you don't want to answer the 5 bits of the survey, then YouTube might say, okay, well, we can opt to you. We're going to use your processing power for the next 15 minutes while you watch this video to do some. We're basically going to earn money from Gather for doing that. And that will get us the 2 cents we would have otherwise earned from advertisers, and you don't get bombarded by ads. And the same thing could be for a news site. Like if you have a look at any news site, it's just covered in ads, or you'll get that autoplay video stuff, and it's annoying because it's loud and it's like, the news companies are only earning fractions of a cent by getting that in front of you. Whereas for the 5 minutes that you're going to spend reading that article, the company could earn that money, that same amount of money, maybe more, by just borrowing some of your computer processing power for that 5 minutes.
Now, are you seeing a trend in these new token projects that are coming out at the moment?
The positive trend I'm seeing is that they're all listing with low market caps. So it means that you're not getting an EOS type raise where people are raising $1.5 billion to deliver absolutely nothing. Like if I was an EOS investor, like an early investor, I mean, admittedly, I did get into EOS fairly early, but I sold out also fairly early. Well, I wouldn't say fairly early, but I sold out in 2018. Or was it 2019? Can't remember. I sold when it was about $20. But I mean, if I was still holding EOS, I mean, I don't know what they've delivered in regards to a usable product. I mean, EOS is literally the dumbest. For doing transfers and doing stuff, having to stake and unstake your network and CPU and blah, blah, blah to use it. I mean, I've still got 10 EOS tokens stuck in my wallet that I can't get rid of because I can't unstake them because I've got to have some in network and some in CPU to do anything. It's an incredibly stupid system for user interface and the way that users have to interact with it, which is probably why no one uses it. So if you just pissed up $1.5 billion to do literally nothing, I'd be pretty annoyed. Bancor, $150 million ICO. Uniswap built a better product and got it to market and actually built a community faster and has actually got significantly more trading volume. I mean, they had more liquidity than Coinbase, which is an accomplishment, right? And that's the trend that I really like. Not raising heaps of cash, getting the community on side first, getting users on side first, incentivizing users to use and try out the platform, and then they get some benefit for holding the tokens, or there's some benefit for buying the tokens, and that's in mind. But there is a benefit to buying SushiSwap. Rather than farming it, you can just buy it. Same as Wi-Fi, there's a benefit to buying it.
For a long time, Uniswap has been around for quite a few years, actually, and it just suddenly recently blew up in terms of traction, right? And do you think that was a proactive push, basically, to all these DeFi projects, or is it because it just made sense because of what was happening in kind of yield farming right now? And
I think that is part of it. People started to, instead of using the traditional like paper wallets or like a MyEtherSwap or whatever, people have, as we all know, the technology hasn't stopped being developed over the past 2 years, even though there was a winter. And so, MetaMask has gotten a lot better. Interfacing with websites is a lot easier to do and a lot easier to build. And so what you're seeing is that a lot of these, for example, specifically things like web-based wallets that need to interface, it's made life so much easier. Like you as a once you've got your money once you've got your money out of your decentralized, out of your centralized exchange, that you get your crypto out and it's on your MetaMask, essentially you don't have to touch another centralized exchange again. Really. I mean, there are sometimes you will and sometimes you won't, but I've got to say life is so easy. You've got $10,000 USDT sitting in your MetaMask. So, all right, I want to take it into this platform and I don't need to anything. But that's one of the reasons why gas fees are so high, is because now people are using it because of this benefit. But in honesty, I mean, it's obviously gas fees are significantly higher, but there's also a lot more people using the network, which is not a bad thing. There's a lot more people using the network, and there's a lot more functionality that people can use. So of course, the Ethereum network is going to be tested, but that just puts a bit more pressure on them to maybe release Casper a bit sooner, but probably 2021, I think.
No, well,
but it pretty much is going to have to be one of those things that we'll just have to deal with it until then. However, there are projects that are coming out on other blockchains. I mean, XLM, Stellar is starting to release projects, and they're very quick. The transactions are like,
because it's very, very low. I know. I heard that
using it, but there's now and so what you might see is projects start to move away from Ethereum into different blockchains for different purposes. Like a lot of payments projects are going over to XLM, and then wrapping their tokens through an Ethereum gateway. So if you just want to hold all your tokens, you can keep them on the XLM chain. If you want to somehow use them in the DeFi world, you can wrap them, and then you get them into Ethereum, which then can plug you into DeFi. So
that's really the thing now, right? Wrapping tokens.
Yeah, you're wrapping BTC and all this stuff. So I mean, this is the industry will never stop innovating to find solutions to this stuff. And I think that it's really cool that a lot of founders are coders. I mean, there's a benefit and a curse, right? I mean, the coders will come up with some really, really cool ideas. But then, the other issue is that a lot of them will just come up with an idea and then not work out how to monetize it. So there'll be a lot of projects that are absolutely brilliant ideas, and the technology will be great. But if they can't, work out a way to make users happy and then to somehow monetize it to, I guess, make the project wash its face financially, it's destined to fail. And that's something we'll see. And we saw that in, the ICO phase of 2017. People come up with these crazy ideas of cool things that they could do, but then you ask the one question, well, how's it going to make money? And then blank stare. Because people just see, oh, well, I'm going to raise $1 million, which is very much the Silicon Valley mentality. Like, you are judged by how big you can raise from VCs, but then turning it into an actual profitable business that doesn't need external funding, it just needs money from customers. That's somehow lost. And I think that we need to get back to that focus on, okay, small raise, grow, build customers, get revenue, get out. Personally, that's one thing I like about Gather. Small raise, I'm not shilling it, but I'm just saying that as an example. It's small raise, $500,000, but then they have customers, they've got a revenue model, and then they've got a way to earn money from their customers, and it's basically eating away at ad revenue. So
when you said small raise, I wasn't actually thinking of $500,000. I was thinking of quite a bit more than that, actually.
Yeah.
I mean, is that so? Where would you kind of put the boundaries of a small raise? I mean, what's the minimum? What's the maximum? I'm not saying this is financial advice. The projects that make money are going to list it under $1 million market cap. It's because of the way that people look at market caps of tokens and supply and all that kind of stuff. I mean, you're more likely to make 10x out of a fight. Put it this way, you're more likely to see a project 10x or 20x or 100x from $1 million to go to 100 million. You know what I mean? $100 million project to get to 100x has got to go to 100 billion. 10 billion. So it's far less likely. So for getting from 1 million to 100 million is doable, but then getting from 100 million to 10 billion is a lot more difficult. And, even Ethereum's only 50 billion at the moment. So, or is it 60? I have no idea. I haven't looked at the market cap for a while. I haven't either. Right, we're coming up to the hour. So tell us what we've got to look forward to for the coming week. What are you up to?
That's what's been happening. I mean, I think the sushi swap stuff will continue to be interesting. We're going to see a lot more. I think that we haven't seen the end to that drama. It's really going to be a question of whether they can resolve it, keep everyone happy, and move forward, and then being able to then manage. Then being able to innovate and put enough code in to keep up with Uniswap. Because I think Uniswap are going to try to. I think Uniswap are going to maybe attempt to do their own token soon, or they'll have to have some competing service. I I think it's going to be really interesting to see what happens with centralized exchanges. I think the way that, say, Binance handled that SushiSwap situation was absolutely stupid because, I mean, I think Binance is big enough to understand where its market segment is and where it fits. It's not, Binance is not meant to be the sole trading platform for everybody. It's literally my external exchange for beginners. Essentially, that's what it is. That's what Binance is.
Are you referring to them bringing on all the DeFi projects onto
it? Yeah, all these random DeFi. Even bringing on SushiSwap was why. Like, it's not even a week-old project with an anonymous founder, no team, no nothing, and it's trading on the world's biggest decentralized exchange. And the excuse was because we want to make trading volume out of it. It's like, come on, man. Like, you can't capture. If the attitude of Binance is that we want to capture 100% of trading volume and we want to be the only one, they are destined to absolutely fail. Because no business can do that. No business can be the everything to everybody. You have to look at your market. Yeah.
Yes, I mean, Binance is also bringing these guys onto their decentralized exchange as well. Did you hear about this? So they're well, not on their exchange, but they're bringing them onto their blockchain. Right. So they're trying to bring the DeFi world.
And Binance was doing that well. I mean, when they did their decentralized exchange, you'd get your B tokens. So that you could interact on their chain, and then you wouldn't be paying all these crazy ether fees and things like that. But I mean, I think that yet again, Binance has to really. I mean, Binance should be the training wheels for people for DeFi. So I think that there is a place for that product, for the safer products where it's okay. Well, we can offer this exchange, and this is the risk, and this is what you need to do. We can offer this rate of return, blah blah blah. But I think it's not designed to be the platform where you get your super low market cap, early, unreal, untested projects. It's sort of where once a project is like, yep, this is a serious project and not a meme, now it can go to Binance. It can graduate to be a Binance project. But the second that they start just listing whatever, I think then they've lost the game. They've lost what they are. Because if they're trying to be a Uniswap, in all honesty, they'll probably lose. And then if they can't, so I end up with something around. But if they can't differentiate themselves from something like Uniswap, it's like, well, what are you then? If they can't say and put a line in the sand and say, well, Uniswap is over here, we're over here, this is the difference, and this is where we sort of, this is sort of the differences between where we operate. I mean, I think that they're just going to lose what they are and inevitably fail. But I mean, the only good thing about them, I mean, the one saving grace is they've got a shitload of money. But if they've got a shitload of money, why are they chasing a little bit of short-term trading volume on some of these pump tokens? It doesn't make sense to me.
That's an interesting point of view. Something to do a bit more research on, actually. All right. Yes. Well, Luke, it's been a good one. It's been emotional.
Always.
So I mean, like, for the guys that are tuned in, if you have something particular that you want us to cover for next week, we're all ears. Like, drop us a comment, drop us a like.
Last week we had talk of Thai ladyboys and all that kind of stuff in the chat. This time was quite tame.
I don't know who follows you, Luke, on your YouTube. But anyway, so on that note, thanks for tuning in, guys. And Luke, thanks for the hour. And
next
Saturday.
All right.
Cool.